Look, as Wolfgang says, interoperability across borders is another critical issue which we look forward to discussing here. In some ways, I see this perhaps as one of the known regulatory issues and challenges coming into the digital age as well. In that, if you look at the G20 agenda this year and what the Japanese presidency has emphasised, there's been a big focus on regulatory fragmentation across some of the traditional banking and finance issues like the ring fencing of capital, the rules around derivatives clearing and the like. But increasingly, and the Japanese presidency of the G20 recognise this, it's kind of pivoting those same issues to look at issues of data and payments now as well. And as Wolfgang just outlined in his introduction, some of the restrictions around the localisation on those issues, where those cause impediments to cross-border activity in the digital world. So it's great that we have both one of the leading banks that operates across all of Africa, across pretty much every jurisdiction on the continent, along with MasterCard being a global, I was going to say card scheme, but Omar's already corrected me that it's much more than just a card scheme, a global payments company, who I think in the nature of their businesses are ideally placed to discuss this topic. We're going to step through a sequence really of four areas or subtopics, if you like. We're going to firstly talk about the value of cross-border activity, the connectivity of international banks and payment systems across borders, and where that's vital to the underlying economy and the opportunities for its participants. We'll secondly talk about the challenges. What is the actual problem here in terms of localisation restrictions, impediments across borders? Thirdly, what are some of the consequences of those localisation restrictions in the way that they manifest and impact people on the ground, impact the individual citizen and SMEs and the like? And lastly, we'll talk about some of the solutions and ways to perhaps overcome the known challenges. We will set some time for audience questions, so please do be ready to jump in and offer your questions and comments to Omar and Kirston as well. But we'll jump in and let's start. Kirston, let's start with the value of cross-border activity, the connectivity of international banks, and interested what you can describe from Standard Bank's perspective and across each of the jurisdictions you operate across Africa of the benefits you see that this brings both for emerging markets and for emerging enterprises.
Oh, absolutely. So Standard Bank's probably in about half of all the African countries that we have, and we are either known as Standard Bank or Stanbic in those entities or those countries. And one of our main value drivers is economic growth of the continent, because without economic growth, you have no financial sector. So it really is core to our strategy and our purpose. So financial inclusion is included in our purpose statement, which is Africa is our home, we drive her growth. And in driving growth, what that means is growth between the countries within the continent. And the countries being able to speak to one another and to be able to facilitate payments and trade within Africa, as well as then to the rest of the global markets, is absolutely essential for economic growth in Africa. So for us to be able to leverage on the kinds of the benefits and the positive effects of Africa that you're already seeing, you're going to have a system where you are able to navigate a very difficult, very fragmented, very much a system or a variety of payment systems across Africa and across the rest of the world. And some of the challenges, which I think we'll get into later, will be the challenges that we're facing in how you actually navigate those different legal frameworks, how you navigate the fragmentation of those frameworks, and how you are then able to work with your regulators to be able to demonstrate the economic growth for each sovereign entity by being able to speak to other entities as well.
Omar, if I can get you to add to that, and again, not just as a card scheme, but as a broader payments business, the value you see of that connectivity across borders.
Let me first thank you, Brad, and let me correct you that, and I quote our CEO, that Apple is not a fruit, Amazon is not a river, and MasterCard is not a card. So just to quote our CEO, MasterCard is a technology payment company leading worldwide. And we look at bringing international organization across transactions, and interoperability is key because organizations brings a lot of knowledge, especially international ones, a lot of expertise to drive financial inclusion and inclusive growth. MasterCard, we played a huge role with the government and with the regulator and with our esteemed financial institutions, partners in the country, to provide such collaboration and public-private constructive partnership to bring this interoperability knowledge and expertise. And we started our journey in 2010 with the government, where we started with building a government payroll program, very unique to serve more than 5 million users. We brought our knowledge to also, and with a cautious investment of building the first global interoperable mobile ecosystem in the country. And now we're taking it to the second level, as a matter of fact, where we just launched recently, and I'll talk about it in a minute, where users can start paying with their mobile phones and virtually issued cards in the first digital city, which is Port Said. Last but not least, if we have to think about the bigger picture, which is growing in a more secured manner. So cybersecurity is very important. Central bank and the government, we're working in a very collaborative manner to ensure cybersecurity. And MasterCard was actually one of the chosen organizations by the government to put some input in the cybersecurity law that just came up. Thank you.
We'll delve a moment in across the broad suite of the problems or barriers and challenges, but I want to perhaps preface that, Kirston, by picking up one of the things you alluded to, which was about facilitating trade, both within the continent and beyond. And trade finance is an area which is often described as, in fact, I had Mike Hogan from MUFG on our podcast about a year ago, and in the introduction I described trade finance as being ripe for innovation. And he corrected me to say it's actually long overdue for innovation, that it's one of those areas of business that continues to be very heavily paper-based. But one of the great challenges is, because it is by its nature a cross-border activity, a multinational activity, it's one where to modernise trade you really need everybody to move along at the same pace and in the same direction together. Is that one of the great, I guess, commercial and cooperative barriers, before we get to the regulatory ones, for modernising that sector?
Yes, and I completely agree with you. I think it's ripe for innovation. It's ripe for something, and I've heard of a couple of initiatives where people are starting to become slightly more disruptive in that space, which is very exciting and which I'm actually looking forward to. But it is one of the ones where, if you're going to start talking about barriers, and you're talking about barriers to entry, and you're speaking about other access to markets and those types of barriers, these are the kinds of things that even the smaller players are facing, which are very, very difficult to navigate. And what we are seeing is that if you are able to facilitate and you are able to create something that is more seamless, that is less full of friction, then you're able to create that market, which is then a lot more efficient, a lot more fast, it's a lot more accessible to people, which automatically then opens up your inclusion space to be able to reach a wider number of people.
So we've touched a little so far on the value of the cross-border activity and cross-border facilitation, and I think we'll probably return to that a little when we talk about some of the consequences of the problems or restrictions. But let's now turn and look at what are those problems, what are those restrictions, and perhaps, Omar, if I can start with you this time, from the perspective of MasterCard, and obviously you're a multinational, probably in every country in the world by the nature of your business, but what are the sort of barriers or challenges that you're facing?
Well, and usually the barriers and challenges is the limitation or lack of collaboration between private and public partnership. It's extremely key for financial inclusion to establish and develop this very healthy and constructive public partnership between organizations and the government and the regulators. This is number one. We've seen limitations in several countries where lack of standards it plays a huge role. Cost for end user increase if we lack these standards, and if there is hindered growth because due to just a domestic and non-interoperable solutions. We also face challenges in the operational. I mean, even to handle different domestic closed loops usually comes with a lot of operational and cost. Last but not least is regulatory issues, because everyone has to cater for, as a closed loop, to cater for these regulatory issues. And there are some potential areas that will be hindered with these challenges. Luckily in Egypt, we have the interoperability and we have this collaborative model between private and public partnerships. We've seen it in smart cities, we've seen it in transit, transportation, we've seen it in tourism. As long as we have the open loop and this partnership, we are ready for growth. Yeah.
So you mentioned there public-private collaboration, and I think I agree that's very important, but we might also pick up public-public across borders in a moment. Before we do though, Kirston, could I ask you the same question, but from Standard Bank's perspective, the specific barriers and challenges you see as you try and do business across the continent?
Absolutely, and to maybe pick up a little bit on some of the points that you were making as well, is that interoperability is quite rare.
Yeah.
Is we don't see it often enough. And so you give the example of Egypt, which is quite exciting, but that's not something that is very common that we see across other jurisdictions. And some of the challenges that we're facing is that if you look at the policy environment in the different countries in which you operate, you often find that there is not consistency of a policy framework to deal with financial inclusion even, never mind a payment system or interoperability, which is always a difficult word for me to say, even though I'm an English language speaker.
Took me some time.
But if you would look at, there was an interesting study done a couple of years ago looking at 14 African states and looking for the phrasing and the terminology and the characterization of interoperability within their policy documents, within a financial inclusion, financial development, Banks Act, Insurance Act, Financial Sector Act, and it occurred nowhere. So there was no governance framework in place, there was no policy direction for it, there was no one concerted view. So you may have, and you may see in certain regional blocks, for instance, you may see in the Southern African regional bloc or West African, East African, those kinds of things that you may actually see a lot of discussion starting on the phrasing and the ability to have rules in place or governance policies, governance standards in place to enable interoperability. But they are very much in the infancy stages and they're very fragmented and there's no agreement between them. So this creates a very difficult environment for a financial sector organization. For instance, we're not a bank, just like you're not a card, we're a financial sector provider, open banking. And we are looking at a policy environment and a legal environment and a regulatory framework environment that is, if it even exists in its singularity, dealing with a payment stream or a digital tech development type of area, that is very fragmented, that is very different, that is in its infancy. Certain countries will have a fintech strategy in place. Other countries don't have anything to do with that. Some have gone straight into a e-currency policy document without looking at a fintech strategy. So it's very difficult to be able to work with, the partners that are within that country, but also government partners that are within those countries, if there's no clear policy direction to be able to follow. So even though the financial sector is moving very fast, and the partnerships with fintechs, which our colleagues alluded to earlier, which are very exciting and very fast moving, and very much meet a need of a customer, what we are finding is that our regulators and our supervisors are either learning as we go along, or B, are actually looking at or trying to import frameworks from other countries to meet local context factors. And so what we need to do, and an area that we like to push or advocate on, is that if we have a set of common governance principles in place for payment systems to follow, for a fintech system to follow, then it at least gives some direction in the absence of a legal framework. Because the legal framework for fintech innovation and development is not just about the legal framework of what you can enable and what you can draw on, it's also what you need in place for when you are dealing with competition issues. For instance, if you have cross-border developments and you have cross-border exports, imports, business developments, any kinds of movements, even people movements, if you do not have an adequate grasp of the competition issues and the competition authorities working together with one another to be able to say what is anti-competitive in one market versus another market, then as an investor or as a financial service provider, you don't have that certainty. So you're looking for that kind of certainty as well. I see the BRICS organizations just brought out a research paper on that, on competition authorities and how they deal with fintechs, I think a couple of days ago. And so these are the kinds of things that you look for. How is insolvency dealt with? How are disputes dealt with? What kind of certainty do you have that you are able to engage cross-border and you are able to have stability and safety, not just in your own structures, but in your ability to be able to operate adequately across those borders?
I think if I can pick up on the interoperability and across different parts of the region that you alluded to, and just to relate from elsewhere in the world, there's been a lot of work done in Asia Pacific through the APEC Data Ecosystem Forum, and particularly within that framework, the emphasis has been very much on the interoperability within the different data privacy and data protection regimes throughout the Asia Pacific region. Acknowledging that coming from different cultural standpoints, there will never be a singular data privacy standard around the world, but the emphasis is on ensuring that you have, to take the point you made, perhaps common guidelines for how a payment system should operate so that everybody's able to slot their own national frameworks to have continuity with that. Our friend JC Marinas at Mizuho has done a lot of work in leading that initiative. But perhaps if we also take, let's take data localization, and there's a number of different specific measures which can have adverse impacts, and part of it is simply protectionist measures where there's a desire to have local data centres purely as a jobs play. In some cases, it's supervisors that are wanting to ensure that they can access data whenever they need domestically. And that it sometimes manifests in a form of insisting that the data has to be kept locally. In some cases, it's about having a local copy or an access elsewhere. One really interesting scenario or anecdote I had recently that I'd like to share is the American agencies, regulatory agencies generally, have been pretty good in promoting and themselves accepting mutual recognition or deference, where they don't need to insist on data being held locally. They're happy for it to be held under the auspices of a regulator elsewhere where they can access it via cooperation with that regulator. And I had somebody in an emerging markets country tell me, well, that's all very well and good if you're the US, because when the US rings Switzerland or Italy to say, hey, we need this data, they tend to get the result. Whereas if you're calling from an emerging markets regulator, you don't get the same level of attention. So is it perhaps that yes, that is the model we want of mutual recognition and deference, that regulators can trust each other and work with each other and not need to insist on data being kept within their borders, trusting that they can access it via their counterparts in other countries' regulators, but that genuinely needs every regulator to step up and play constructively to that to give each other the confidence. I don't know if that resonates or... It
resonates a lot. It's very, very familiar, and also just in terms of some of the policy and regulatory developments that we've seen in some of the countries that we operate in, is the caution that is raised on where data is kept and who owns it, and ownership, and where things are located, and how this then links to the safety and stability of your system, and how it links to your financial sector security, and whether you then categorize those kinds of systems as critical national assets, and what do you do with those critical national assets, and how do you protect them. And I completely agree with you. It's to enable some kind of communication between our regulatory authorities, it does require quite a high level of communication and collaboration between them, and across a variety of contexts globally, for this to be able to get off the ground. I'm smiling because I recall how complex and how difficult this has been, even within regional block structures.
Yeah.
So even the SADC area, the Southern African area, I don't think that we have that level of alignment in place yet. I think we're getting there, but I don't think we have it in place yet. And I also think that if we are, I recall the conversations we've been having through today and earlier this morning about where innovation is taking us and what fintech is enabling us to do, and what open banking actually really means to a consumer and to a customer. then these are the kinds of difficult regulatory supervisory questions and challenges that we're going to have to overcome. And we're going to have to overcome them in a way that has at least a very basic set of standards in place for us to follow.
Yeah. Yeah. Let me add the role of the regulator is extremely important. I mean, and what roles he plays in the country, domestically and actually cross-border with other regulators. We've seen in countries, especially in sub-Saharan Africa, where the regulators plays not only a policymaker role, but also plays another role of service provider. And honestly, we see that regulators sticking to a policymaker and regulations and an enabler to the market makes a huge difference. And we've seen this in several countries around the world, especially in actually Asia Pacific. This is one thing. And the other thing is, we are lucky in Egypt actually to have this framework between the central bank and financial institutions and international organizations. But we've seen also that the central banks and regulators around the world also leverage the global expertise of global organizations to facilitate this cross-border discussion with other countries. Because at some point you have to use the economies of scale. So global organizations, how they're going to serve the country is by the economies of scale, knowledge, and bringing expertise. And we're all achieving one goal. It all drills down to one objective. Financial institutions, telcos, government, is how to help people to have improved lives and to build for sustainable future using financial-driven tools and services. That's the objective that we all trying to achieve. So as long as it's a collaborative model, and I keep always mentioning collaborative model between all players, regulator playing just a policymaker role, we achieve this objective much faster.
So I want to pick up and go further with your point there about how we make people's lives better. But before we do, I just want to bring in one other anecdote, and I don't mean in any way, Kirston, to be diminishing Standard Bank's leadership here by quoting one of your peers domestically. But we had our annual membership meeting in Washington recently, and probably one of the most striking insights I took away was from Jaco Grobler, the Chief Risk Officer of FirstRand, who explained to our audience there that what we're actually seeing across Africa is this trend where the banks are adopting Western technology, partnering with the American cloud firms and the like, but at the same time, the telco companies, telcos are using Chinese technology. And at the same time as we have some of the regulatory interoperability issues across borders, that perhaps opens another question of whether just the way that these different sectors are evolving is going to create interoperability issues of its own. Thinking also of Dr. Amani's comment this morning around I guess the criticality of the prerequisite of having the internet access and the telephony services. But I'm just wondering if that's something that you're seeing as being an additional barrier in terms of the collaboration with other sectors and the like, that these technology integration and partnership paths are taking different paths.
So it definitely is something that you have to take into account, and it's something that we do grapple with quite a lot in terms of where your technological developments are coming from and where the greatest predominance is coming from. And I think I need to state up front that our banking group, or our financial services provider group, has we are 20% owned by a Chinese bank. So we have a connection to China in that sense, but we also have a connection to a lot of the Western technology that has developed, but then also a lot of the South African telecommunications companies where we partner with them as well. So it's becoming a challenge to be able to merge and mesh and be able to ensure that there's interoperability between those technologies. But at the same time, I think we need to acknowledge the fact that while we need to this is what banks are good at. Banks are good at understanding risk. That's what we do every day. So we look at the risk that this technology brings to us. We also look at the risk that these kinds of frameworks would then provide to our customers as well. Because it's not just us, it's our customers and what they have access to in turn. But we also need to look at the risks that the technology itself brings. Is the technology going to be something that is going to be around for a very long time? What are our backup systems, and how do we deal with reputational issues when there are trust issues with certain technology providers? For instance, if there have been data breaches or other kinds of accusations against technology companies, and how do we manage that as a financial services provider? But I think that's what banks are good at. Banks are good at managing risk. They're good at looking at these kinds of problems and coming up with solutions and partnering with tech companies to be able to find a way around these kinds of issues. What we really need is a kind of interoperability of our policy environment so that there's some kind of commonality there. And I think that a lot of the technology advances that are happening and the risks that does bring to us is something that we're just going to have to live with and manage. It's part of your change management risk that you're just going to have to deal with.
So let's pick up the point you made a moment ago, Omar, about how we benefit people's lives and where interoperability intersects with this as an issue. And again, I'm going to tell another anecdote from our recent annual membership meeting where Richard Nash at PayPal recounted the story of requirements that Turkey brought in, I think about 3 or 4 years ago, requiring local processing of payments. And one of the consequences of that was that PayPal ended up exiting the Turkish market. And perhaps the intent of that initiative was to help foster a domestic payments provider. Firstly, I don't think that's really happened, but secondly, it's created the barrier there for transactions in and out of the domestic system. And with the consequences for tour operators in Istanbul that are trying to take money from foreign tourists but have lost that as a channel for doing so. So let's talk a bit about the consequences for end users where there are some of these barriers across borders. Omar, if you'd like to start.
Yeah, I think you mentioned a very critical industry. I mean, for such limitations, which is the tourism. And for Egypt, since we're this year especially, we're striving in the quality of tourism that we coming to Egypt actually. That's a key area of focus for Egypt, and having a closed loop and having a non-global standard infrastructure or electronic payments will hinder such industries like tourism. Also, we will, as MasterCard, we invested in Egypt in the last 10 years a lot, building mobile ecosystem, government payroll, and we would have never invested and continue to invest if this interoperability and open loop that happen in the country and the collaboration between everyone, if it's not there. And a testimony of this is currently everyone at financial institutions, ourselves, MasterCard, and central bank and government are very focused on SMEs and emerging enterprises. I mean, emerging enterprises without interoperability and with the limitations of closed loop, we would never be part of the formal economy. And we just launched MasterCard in collaboration with the central bank and one of the leading banks is the SME Marketplace, which is a platform for supply chain model. And it just launched last week to facilitate credit to the small merchants. And regardless the source of fund, regardless the channel he's using, it's part of the formal economy, it's part of the financial institution framework. And without interoperability, without having the global standards in place, we will have limitations to apply these things and to serve this segment of SMEs and tourism and so many other segments, like, for example, the agriculture business. Yeah.
Kirston, do you want to add to that?
I'm jealous.
We're lucky in Egypt.
I think you are lucky
Yeah.
in Egypt, and I've come to realize that in my 2 days that I've been here.
Oh, yeah.
I think from our experiences and from the SADC areas, a lot of the customer needs and the customer drivers for needing us to have interoperability are that in the SADC region, the countries are very closely linked. There's a lot of movement of people across borders, and there's a lot of need for remittances. So it's a lot of it's been driven by remittances, a lot of it's been driven by that kind of need. So regardless of where on the financial inclusion spectrum you want to place this financial inclusion, from, I was hearing Larry and I really liked his definition of financial inclusion earlier, from the kind of very, what I like to consider quite basic, which is sort of money in, cash straight out, which is a difficulty that we deal with every day, to something where you have access to a financial system and you use it to enable to grow some of your social or economic needs, is that the interoperability has to meet that customer's need to be able to use the money in the way that they see fit right then and there. And if it's not able to do that, then it doesn't matter what kind of fancy system you have in place or what kind of solutions that you draw together, you're not going to meet the customer's need. And it may look fabulous. You may be meeting a need of somebody who is at a completely different level. You're not meeting the needs of your vulnerable consumers. For the clients who are at what we saw, or what we heard recently at the bottom of the pyramid, the people who need to be brought into the economic system, often the ones who are getting social support grants, the ones who are who actually use that money to keep the pot on the stove. So if you are not able to actually use that system and to be able to drive the kinds of the way that system needs to speak to one another across those borders, then you're not meeting a relevant customer need, in which case you're actually not getting it right.
Let me add, Brad, if you may. You're absolutely right. I mean, it took us 2 years, actually, to... we all talk about collection model to attack cash pools in the supply chain. And it took us 2 years in cooperation with the regulator and banks to understand the SME and the merchants, what they want, what they really want. And it's not only about getting the least, the goods with the least cost. But as a matter of fact, he was looking for increasing his working capital. And how we use interoperability, now I'm using the same, interoperability and technology to serve him better and to serve banks, actually, because banks, when they have data of these small merchants and SMEs, will be able to offer more credit facilities. And last but not least, we were able to understand his demographics, even in his framework. So what he needs, we found a lot that, and we've seen it a lot in Kenya, and especially in Kenya and Egypt, that the working capital is for 1 day.
Yes.
So it's a very short term.
Yes.
Without having access to different tools, regardless the channel, regardless the source of fund he's using, that would be a problem without interoperability. Yeah. We will never be able to reach the bottom of the pyramid.
Now, a reminder that we're going to invite audience questions in just a moment, so please do start indicating or signalling in. We'll get one of the roaming microphones to you in just a moment. Before we do that, let's talk a bit about how we overcome some of these barriers. And I think we've talked a lot about the criticality of overcoming it, but how do we do that? What are some of the measures we can take in pursuing that? Omar, would you like to start?
Yeah, I mean, the way forward is very simple. I mean, we've tried it, we've seen it. It all drills down to the end user and the consumers, the SMEs, what they really need and how we can serve them better and fulfill this need to be able to have the inclusive growth. So we talked about the collaboration. We talked about private and public partnership. This is key to move forward. We talked about regulator role and how it impacts the country to move forward, to attack cash pools and also to drive financial inclusion and inclusive growth. Third is offering locally relevant solutions. So a lot of organizations, global and local, they have very nice solutions, but are they relevant to the type of consumer and segment and to the market itself? This has to be coupled and married with 4 key things. First is the financial literacy. Without changing the consumer behavior and awareness of financial benefits, either he's a consumer, he's a merchant, he's an SME, without this financial literacy and awareness, the growth will be hindered again. The second thing is a regulatory framework. And I think as I said, we're lucky here. The government, the central bank are issuing a set of rules and regulations that are helping in this growth. The third is the privacy and data privacy. Like you mentioned about the data being hosted, what type of data, and I think again the central bank and banks in Egypt and in our regions very cautious and about cybersecurity and how we move forward with this. Number four is the infrastructure. I mean, enhancing the infrastructure to reach every citizen and every merchant is key and has to be coupled with all the three pillars of moving forward with financial inclusion and improving people's lives and building a sustainable future.
When you say financial literacy and awareness, would you put data awareness or data literacy in with that as well?
Of course, because data is actually key to offer the relevant communication to people. Allow me to share an example. Actually, happened recently in Egypt. One of the issuers were actually issuing a mobile wallet, was communicating to his base and consumers to understand that he has a wallet and it does X, Y, Z. When we started to shift the communication based on data and AI and talking to him relevantly to what he needs, and he started to communicating on a very specific need that he does based on the data, the growth of the mobile was actually more than 20% in one single month. So the communication based on data is offering relevant communication, relevant solution also, is extremely important.
Kirston, to overcome these challenges, what do we on the industry side need to do, but what would you also like our partners in the regulatory community to be doing?
And I think I completely agree, so we'll then jump off and maybe add a fifth point here is what we do require, especially cross-border, is, and perhaps it starts in regional blocks and it starts in common monetary areas. It starts with the regulatory environment that is set up with political will to be able to actually enable this interoperability. Because if you don't have the political will and central banks who are driving it and central banks who buy into the system and see the benefits and the economic development that can come from these kinds of initiatives and these kinds of developments, you're not going to actually get any kind of traction.
Absolutely.
So we're very lucky, for instance, we have a common monetary area in the SADC region, which is made up of 4 countries. And starting in 2009, our journey started to develop a payment system that actually can do settlements across borders. We're not there yet, but we're very close to getting there. And I think these kinds of proofs of concepts of environments that have common model law, common governance standards that can then be strengthened, can then be used in other countries and can then grow and develop and connect to other systems is probably the way to go to get more cross-border integration going. But I completely agree with Omar's 4 points there and would completely emphasize, especially on the financial literacy side. Because if you have somebody who is not financially literate, it doesn't matter how many cell phones you provide to them, they will still not use any of them.
Yeah.
And they will still try and find cash and put it under the bed.
In contrast to the example that George Imperios gave us this morning of the person with his deposit books that needed updating, and he knew exactly what he wanted and exactly what he needed in that case. Can we invite some questions or comments from the audience? Please, if you can just indicate if you'd like to jump in. We have a couple of roaming microphones in the room. If not, look, can I pick up the specific example of M-Pesa in Kenya, which is obviously a much championed example that we hear about all over the world and not too far away geographically. Mm-hmm. But I guess my impression as an outsider is that M-Pesa has been a very effective system within that closed loop, and it's the closed loop that you described earlier, Omar. And I think it picks up a little bit of what we discussed with Dr. Omani and with Hisham this morning around some of the domestic solutions within Africa. But it would seem to me that that's a great solution if you're wanting to sell in your local village, in your local market to your neighbours, and that it's a solution that has its shortcomings the moment you introduce the foreign tourist or the enterprise that wants to become an SME and actually be able to export. Is that sort of how it would appear to you from closer range, and that we need to instead be emphasising, again, the connectivity that international
Absolutely,
firms can bring?
Brad. I mean, M-Pesa is a very successful mobile payment platform, but for a domestic level. They just started to move to neighboring countries once they started to understand the benefits of open loop. As a matter of fact, they started using MasterCard APIs in some of the other countries in order to scale to a very specific use cases in other countries. As a mobile payment, and again, domestically, they will miss a lot of the segments, like you very rightly mentioned, tourism, SMEs, and so many others, actually. So we believe that M-Pesa did the right thing to have open APIs now. They're welcoming global payment organizations, banks to participate, to be able to help them to scale not only domestically and not only in neighboring countries, but actually cross-border.
And look, I think maybe just as a final comment to lead into our following panel, we're going to close the day shortly with a panel on digital identity. But I think that's another area where interoperability will emerge as one of the key issues, that to be able to genuinely help promote inclusion and help to overcome some of the AML, KYC, de-risking issues that we've had around the world in the last 10 years. We really want to be able to have digital identity solutions that are interoperable between firms and the public sector and across borders. Is that,
Absolutely.
Kirston, is that a priority that you're looking at as well?
I think it's essential. I think it's one of the areas that we see as absolutely essential. It's one of the ones where we are going to see something, quite a big sea change happening quite soon. And I think we didn't really touch on, when we were speaking about interoperability, we didn't really speak about the AML and the de-risking areas as well, which is absolutely essential. Because if you think that your cost of compliance could be incredibly high with your AML, your KYC requirements, if you have a one-size-fits-all approach, but you rather take a more risk-based, principle-based approach, and you can meet the needs of a very lower risk end of the market, that would be something that you would need to be able to do. And for instance, the digital identity would be something where that immediately can help you sort out those risk areas, and it can be areas where not only within the financial sector, but also within your government sector, your social security system, that it can be used within those kinds of domestic markets too. And we're seeing a few public-private partnerships where this is being used quite well in a pilot phase, and where, especially when we have in countries where identity doesn't exist in a paper format or in a government database format. And these are the kinds of things where I think that eventually, as one of the biggest barriers to entry, we can actually see some kind of fintech innovation happening to be able to get people within the system again.
Well, we've hit time. I think just to conclude, I think that's given us a great segue into the digital identity panel that will follow. If I can perhaps make one final comment, just drawing together some of the themes from the discussion, and I do like the 4, or as it became, 5-point format. But I think both Omar and Kirston have emphasised the importance of the public-private collaborations, and I think we all have a very important role in the private sector in being part of that. But I think also we've alluded to the role that the private sector has to play in the public-public collaborations, and that we need to see greater collaboration and trust across borders. But we have a role, particularly international firms, in helping to educate and to champion that cause to the regulators in each of the home and host jurisdictions that we operate in. So that's something that I think as an industry we'll look to take forward, the collaborative nature on both of those senses.
Absolutely.
Please join me in thanking Kirston and Omar.
Thank you.
Thank you. Thanks.